Hi traders, good morning, good afternoon, good evening. So in today's video, we are going to analyze Bank Nifty, and we will also see how we can hedge our positions in options and understand the importance of being a successful trader and risk management. So let's get started. So as you can see, we are on investing.com. We have our Bank Nifty chart open, which is a daily chart. You can see here. So we have used a super trend and a 20 period moving average and a 200 period moving average. So if you are following my videos, you will know that in the past we have drawn certain trend lines. So those trend lines are still on the chart, and as you can see, that trend line has been broken, and from there the market started crashing, and now mostly the market is in a consolidation phase. So you can see it's in a box, in a rectangular box here, starting from here till here. So it is in the range, but one thing you need to notice is that price is above the 20 period moving average, and it is holding it. It has not closed below the 20 period moving average for almost 1 2 3 4 5 6 days now, and the moving average is also turning upwards. So but we have to wait and watch how the market opens on Monday. My prediction is that it will again be in the same zone. Maybe it can form a green candle here and stay here, or it can again come back, touch this line, or it can form a green candle, touch this line, but it will be in this zone for Monday. Let's analyze this on a monthly time frame. Monthly time frame, you can see it is forming a green candle. So this is a kind of a doji pattern where you can see there is a lot of indecisiveness in the market. It is not taking any direction. If this lows are broken, then it can take the direction downside. Let's analyze the weekly time frame. Weekly time frame, it has taken a bounce. The biggest red candle was this. Its low is not broken, its high is broken, so the trend has changed here to bullish. The second candle high is also broken, so this is also bullish, and this candle high is also broken but has come down. So until this low is broken, the trend is still bullish. So let's analyze this on 15 minutes time frame. So 15 minutes time frame, you can see this was the trend. We'll draw a trend line here. This was the trend for the previous day. The market opened below that. The moving averages take some time to appear in investing.com. Don't know why. So the market first candle opened below the trend line, and the second 15 minutes candle didn't take the high. Third has taken the high, but there is a resistance upwards because that is the 200 period moving average we were having, and then the market came down from there. Again it tried to break the 200 period moving average, and it was successful, but again there is a pivot point here which is a daily resistance, and also there is a super trend which is holding the price down. So from there the price has come down. So it was mostly into the sideways range where it has opened, it has ended up in the same place. So mostly we can expect the market to open a little higher and come down the next day. So but we'll mark our levels here. So this is the level where it has spent the most of the time. So this will be a critical level to watch. If it opens up higher, then comes back to this level, again there will be a buying, or if it opens up below and then it comes still here, then there will be selling. So understand this concept. So here there is one of our setups. This is called as bear 180, when one green candle is taken out by a full red candle. So this is a shorting opportunity. So here it gave an opportunity, but it was a very short-lived opportunity. it didn't give much of the returns. And if you had a stop loss above this, would have triggered your stop loss here. Again, this was a setup. There's a narrow range candle at super trend and then a red candle. This is a shorting opportunity. The stop loss will be above this, so this would have worked for you. So once we identify the range in a day, say in the 5 minutes time frame, so we have seen that market has opened here. So what we need to do is we need to sell the call which is above this, say 20,400 or 20,500 calls you can sell. But since that was a Fridays usually the premiums don't decay because that was the first day of the expiry. So even if they decay very little basis the trend. Since there was no trend this day, the decay would have been very minimum. So you will not be able to make money in selling on Fridays. Just note it down that most of the Fridays decay will not happen. So it's better to play directional on Fridays. Let us also look at a 1 hour chart. Let's see a 1 hour chart. So this was the first candle. The second candle took the high. Third candle was narrow. So here this low was broken. Actually it broke on the both sides. Then the trend changed to bullish. Here the trend was still bullish, and when it broke the low, trend became bearish. And now the trend will continue to be bearish until unless this high is broken. So you need to watch for this. If this high gets broken any of the time, then you can say the trend has changed to bullish. This is a short video on Bank Nifty analysis. If you want to see how we can hedge these strategies, I will tell you a simple solution. Always look out for the range of the market on a daily time frame. So this is your range. Okay, this is your safe range. Assume that we will try to get a box here. Let's use horizontal lines. This is your range. Okay, so we have marked our ranges 21,052 and this is the bottom range which is about 16,000. So what we can do is we can go to NSE, which derivatives, and then go to Banknifty. So 21,000 is our higher range. So 21,100 you can take, which is at 85, and the lower range was 16,000. It was 16,100. So you can take 16,100, but the price is at 9 rupees. And the price is about 21,000 is about 85 rupees. So this will not be a proper hedge because this is 85 and that is 9. So we need to identify a similar. So 21,100 is our top range. Above that, if you choose to sell anything, it is safe. So you can choose a 20,200, which is about 20 rupees price. And here you can choose anything about the 16,400 or whichever has a maximum. 16,500 has good open interest, so you can choose this 14.3 rupees and 20. So that will be a good hedging strategy which you can sell for intraday and then manage that position. So whenever you get this 14 getting decayed, you book that and then try to roll it up. So there will not be much of a movement in this because it is purely out of the range. So that is one way you can actually hedge your position.